Hey crypto friends, every time crypto is about to reverse on the intraday charts, one thing always pops up over and over again. And when it does, I know that the market is close to reversing in the opposite direction. And I am going to be showing you today what that is in today's video. Now, for those of you who are new here, my name is Garrett, and I am a crypto day trader and your personal shortcut to making better trades in the crypto market. And before we actually go ahead and get started in this video, for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here. You can find a link to it in the description below this video. All right, guys, so it is pretty much safe to say that there are many, and I mean many different ways that you can tell when the market is about to reverse or when the market is close to reversing. All right, but in this video I'm going to be showing you my own way of doing this based on my own personal trading strategy that I have been day trading with for years. All right, so the first thing we're going to be looking at is a example of price action reversing to the upside. All right, so we're going to go ahead and go to Solana here, and I'm going to be showing you one very simple example that I recently saw in the Solana charts. So this is going to come off very simple. I'm going to try to explain this in the most simplest terms as possible. All right, so some things that I look for a potential reversal, for an intraday reversal, is weakened sell pressure based on the candlesticks themselves at support levels, coupled with bullish candlestick patterns. All right, so here is what we are going to go ahead and look at. Oops, sorry, not Solana. We're going to be looking at Raydium here. All right, so here is a perfect example. All right, for as far as upside is concerned right here, the one thing that I technically love to look for is, first of all, for those of you who don't know me, I trade with the 7-period moving average on a regular basis. Anytime I'm day trading, I'm using the 7-period moving average. All right, it just works for me. I love it. It's been a great tool for me to use. But so as you guys can clearly see here, I've already got it written out. Price came down as part of an elongated intraday downtrend. As you can clearly see right here, we had a big downtrend that happened right in here. All right, we had 4 small legs to it. Okay, now here's the thing. All right, each time that happened, price action deviated super far away from my moving average. You can clearly see the distance from the moving average here all the way down here. All right, now when this typically happens, usually what happens after that is price tries to go back upwards, back to the moving average to try to kind of reset itself. As you guys can clearly see, that's usually what happens. See right here, price came down all the way, and then it tried to go back up and go back up to the moving average to retest it to see if it's got enough strength, or to see if bulls are strength, or see if there's enough strength in bulls to be able to push it up even higher. But that clearly didn't happen right there, and it came back down a little bit, back down to where it dropped in the very beginning, and then it kind of rode out for a little bit, and then it finally went back up. Now, it was not enough to go all the way back up to these previous highs up here, so instead it ended up coming up all the way to right around in here, which, as you can clearly see on the dotted line, which is a resistance area that we created in the previous move upwards right here, and it stopped right there. All right, it stopped right there and started to go back down, and then it kind of went up and down and up and down, once again continuing the downtrend. But as you guys can clearly see here, every time price ends up coming down from the moving average and deviates super far away from it, it's going to eventually go back up to the moving average to retest it to see if there's enough strength in bulls to continue it to move even higher. All right, so this is a perfect example I found right here. Price ended up coming all the way down, came super far down. It came super far away from the moving average right here. And obviously the natural next thing to do is price ended up opening up green on the next candle, moving all the way up, coming up to test the moving average. And as you can clearly see, when price started to get around the moving average right in here, you can clearly see these candles, these green candles in here. Let me make that bigger. You can clearly see these green candles in here started to become more kind of like, they weren't bullish candles, but they weren't bearish candles either. They were more or less indecision type of candles. We've got these spinning tops right in here. All right, so that clearly tells us that right there, once we hit that moving average, that tells us that bulls and bears couldn't figure out what to do, but overall, in the long term, what ended up happening was obviously we ended up moving further to the upside and clearing this previous resistance area right here, which would have been, again, more further confirmation that, okay, we're probably going to end up coming, going up even further, because now bulls have complete control. All right. So that is how I like to be able to tell when a bullish reversal is going to be happening very, very soon. All right. It's all got to do, for me personally, it's all got to do with price action deviating super far away from the moving average, coupled with the different types of candlesticks that form. All right. And here is another perfect example of that. All right. Same exact thing happened here. We came all the way down, deviated super far away. So naturally, and this is also a spinning top candle, by the way, as you can clearly tell, this last down candle right here. Spinning top candles are indecision candles. It means bulls and bears typically don't know what the heck they want to do. So you don't know what's going to happen in the next candle. It could be up and it could be down. All right. Obviously, this one right here, because we were so far away from the moving average, bulls took over and came back and retested the moving average right there. And to be honest with you, I like to trade these a lot. And the reason why is because, a simple trade like that, that right there would have yielded about 3.8%. Multiply that by 10x leverage, you're making almost 40% profits right there, just off of that simple 2 hours of it going up and retesting that moving average once again. All right. And that's solid profit here. Okay. So now that we got the upside taken care of, let's go ahead and talk about downside reversals. All right. So this is the best example that I could find in a very, very quick manner. Let me go ahead and make this bigger here. So as you guys can clearly see here, we had this previous resistance area right back in here from this previous, upswing that we had right here. So when we ended up coming all the way down, and we ended up creating this nice W pattern, obviously, and we started to go back up, all right, which is cool and all, but obviously it's not going to last forever. So it tried to go all the way up, and it tried to obviously go ahead and break this resistance area up here, but it did not reach that resistance area, and instead it rejected it. And you can tell by looking at this candlestick here. This candlestick is technically, it's a very, very large one, but it's pretty much a shooting star candle, which if you check out a shooting star candle, you can clearly see that it has a very long wick at the top, followed by a body at the bottom with no wick at the bottom. All right, that pretty much tells us that bulls tried to push it even higher, but bears ended up taking over and they ended up pushing it back down, creating that bearish sell pressure, or bearish I can't speak right now. Bearish sell pressure. There we go. All right. And that's exactly what happened here, okay? And as you guys can clearly see, the same kind of thing happened right here as well. Remember how I was talking about to the downside when it goes all, super far below the moving average, it's going to go back up to retest the moving average? That's kind of what happened here as well, all right? Price action ended up going way above the moving average and deviated far away from the moving average, and naturally it's going to try to come back down and try to retest it again, and that's kind of what happened here as well, all right? And as you guys can clearly see, this downward move went all the way down to the previous low, intraday low that it created right back in here as well. So that's pretty much how I like to tell when a reversal is about to happen. It's very, very simple. It just takes some getting used to. There's all kinds of different other ways that you can be able to tell when the market might start to reverse in the opposite direction. You can do it with the MACD indicator. You can do it with all kinds of other different indicators. This is just the way that I personally like to do it. All right. And if you are comfortable with trading with my own personal strategy here, the more that you personally start to see these conditions on the chart, the more often that you will personally start to see when a reversal might be happening. All right. Now guys, before I go ahead and wrap up this video, if you guys enjoyed this video and you feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel, hit the like button below the video, and drop me a comment down below this video as well about something that you loved about this video. And with that said guys, for those of you guys who stuck around and watched this entire thing throughout the whole video, thank you guys for watching. I appreciate all of you.